When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses about Bitcoin and other crypto. According to Michael Saylor, Bitcoin is going public. It's similar to the IPO of Bitcoin. But it's as if 10 companies are simultaneously going public with Bitcoin, since Bitcoin is considered a commodity rather than a security. The notion that BlackRock, Fidelity, Grayscale, Bitwise, and ARK are all making moves. Bitcoin going public simultaneously is a significant development, although Michael Saylor expected it. ETFs are successful because Bitcoin is considered the top ETF among others, revolve around oil, such as commodity ones like gold and platinum. Silver and palladium are part of the commodities market, along with natural gas. All of these things are considered poor investment assets because physical commodities are not scarce and can be defective, produced in any quantity with extra funds and expertise. Ultimately, the best option is the gold ETF. But if a significant amount of money is involved, investing in a commodity ETF that channels funds into FTO's capital, producers simply release the commodity into the market, causing the price to decrease, which is why commodity ETFs were never very effective. On the other hand, let's compare these Bitcoin ETFs to the S&P, the largest ETF to date. And perhaps the most significant development on Wall Street was the introduction of the Spider S&P 500 ETF in 1993, approximately 30 years ago. The concept of creating an ETF emerged, represented a diverse portfolio of 500 stocks that was significant and noteworthy. It was significant because it emerged when people had lost trust in currency as a reliable form of money and savings. And lots of things Michael Saylor discuss. So please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public. Because Bitcoin's a commodity, it's not a security. So the idea that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the Spider, SPY, in 1993. About 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. And so they were trying to figure out what is money. And actually an entire generation of people picked the S&P index as money, right? How are you going to store your excess cash for a decade or longer? Not a checking account, not a savings account, not a bond, but the S&P. So the S&P became money, and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there.
According to Michael Saylor, Bitcoin stands out due to the fact that no amount of capital flowing into it is ETF going to generate more Bitcoin. We currently have 900 Bitcoin. On April 16th to April 18th of this year, we plan to visit 450. Bitcoin is set to undergo a significant event known as the Halving, which is expected to be the most impactful one in its history. Bitcoin is like someone entering the conversation. The market indicates a plan to purchase $8 to $5 billion of Bitcoin annually. Ensuring the next 4 years are secure is crucial. Given the anticipated impact, $23 million a day at the current price is a significant amount. Quantity, but more importantly, there is a significant need change in supply during the year when the demand through the ETFs has increased fourfold. 10 times the daily supply means institutional capital is flowing in. Let's back to the Michael Saylor interview.
And that's the same as you have with commodities. It's the same as you have with REITs, real estate investment trusts. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years. Guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand-supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply. So what you have is institutional capital entering, and then you have the supply getting cut in half. And, what happened with these ETFs? Well, here's what happened. The approval of the ETFs was a pretty concrete endorsement of Bitcoin as an asset class by the regulators. And anybody who's thinking about banning Bitcoin or not approving Bitcoin ETFs, they're now out of consensus. So it really flipped the global consensus from, well, maybe it's too good to be true, maybe it'll be banned, maybe it won't be banned. The approval of those ETFs meant that it doesn't matter who wins the 24 elections. It's taken the future of Bitcoin out of the hands of the president. It's taken it out of the hands of the next head of the SEC. It's taken it out of the hands of most regulators in the world. We pretty much opened Pandora's box or crossed the Rubicon. It's very concrete at this point. And it was uncertain right, before. And so that's a very big piece of regulatory clarity. What happened next is it's created a positive dynamic where now I think you're seeing pressure to approve ETFs in other places in Asia. You'll probably see Hong Kong spot ETFs. You'll probably see them get approved in any country where people are on the fence. It also created a fee war. It used to be that you paid 2.5%, to hold your money in grayscale. And all of a sudden now you're paying 1.5% at grayscale, but you're paying 25 basis points at BlackRock, or you're paying 20 basis points and even 19 basis points. Not only did that bring down fees for institutional holders of Bitcoin in the US, it also put pressure on international fees. So you actually saw a rippling effect, and people with European or Canadian or other spot ETFs in the rest of the world that had 100 basis point fees or 150 basis point fees, they're having to bring down their fees because otherwise the capital will flow out of their instrument into the lower cost instruments. So, yeah, let me convert the math here. If you have an infinite duration asset and you're going to put money in it, then the difference between 2% fees and 25 basis point fee is losing 37% of your money. You understand? Like it's like I take a third of your money. Okay. So if you're a Bitcoin investor, having low fees means you invest $1 million and you get to keep the $1 million. Having high fees mean you invest $1 million and you lose 300,000 of it over the course of 20 years. So those low fees are, well, where is that going to manifest itself? It's going to drive the price of the asset up, right? First of all, because the people that own the asset aren't losing 1 or 2% of their money every year. But second, because there are a lot of people that they will either invest $1 million in it or nothing, right? So if I like it, I'll just invest $1 million. If I don't like it, I'll invest nothing. So you start to see money flowing from gold into Bitcoin, from real estate into Bitcoin, from the S&P index into Bitcoin. And so that's a big deal. So the launch of the ETFs, it's been very successful. This is the ideal type of asset to put into an ETF wrapper. It's definitely it's the global asset. It's the biggest brand. Everybody knows what it is. It's actually the best thermodynamically sound investment. It's got the best historic performance. And of course, it doesn't have the entire array of risk factors that a company has or that a bond has. It doesn't have credit risk. It doesn't have corporate execution risk, and it doesn't have currency devaluation risk. And it doesn't have the physical risks of real estate. It's not going to ever get hit by a bolt of lightning. There's not going to be a tornado. It doesn't have maintenance decay. It doesn't have property tax risk. It doesn't have the political risk, right? Ask yourself the question, you got $1 billion and you got to buy some real estate in Africa. Where? And where do you want to invest $1 billion in a building? What country? What city? Where? Or you can buy Bitcoin. And of course, so you can see this is a higher quality thing. What was Bitcoin's number one liability coming into 2024? It wasn't the risk. It wasn't the thermodynamic risk factors. It wasn't the technical capabilities. The number one risk factor of Bitcoin coming into 2024 was a government would ban it. But see what just happened in January. The opposite, right?
Michael Saylor collect a portion of your funds, so if you're into Bitcoin investing, you're aware of this. Investing with low fees allows you to retain the full amount you invest. Investing with high fees can impact your returns, million, and you lose 300,000 of it over the course of 20 years. So those low fees, where will that manifest itself? Will it drive the price of the asset up? Firstly, because the individuals who own the asset are not losing 1 or 2% of their money each year. Secondly, because many individuals tend to either invest $1 million in it or nothing at all. So if Michael Saylor like it, he will invest $1 million. If you don't, he will invest nothing. Then you start to see money flowing from gold, transitioning investments from real estate and the S&P index to Bitcoin. And that's a significant development. The launch of the ETFs has been highly successful, making it the perfect type of investment to place in an education ETF wrapper. It's undoubtedly the top global asset. It's the most well-known brand and considered the top thermodynamically sound investment. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.